Look, I want to zone in on software with you and these software companies because they really have taken the brunt of this AI sell-off. Some say that is an unfair situation that's happening with investors. Do you think that these software companies can adapt to the changing landscape that's happening in the tech sector? Because frankly, it seems to be a little bit of an overblown reaction to the advancement we're seeing when it comes to AI.
Cheryl, I agree with you wholeheartedly. I think this is an overreaction. It's as if when AI innovates, Wall Street holds a funeral for the old guard. Software was one of those last week. We saw it happen with financial services. We saw it happen with trucking closer to the end of the week. The reality is these software companies are going to continue to innovate with the new AI announcement of, let's say, tax software specifically, or the new AI announcements that are consistently coming out. We've got companies like Intuit that sold off. That type of sell-off, investors should be looking at that, because what's likely to happen are these incumbents buying up the new companies with that innovation that they bring to the table.
Yeah, you mentioned Intuit. Obviously, navigating the tax code is difficult, to your point. But you're also looking at DocuSign, and I want to get your take on that, because you're saying the PE is a little bit higher than you'd like to see right now.
Yeah, Cheryl, DocuSign is one that we've got our eye on, and if it continues to fall, PE ratios, if we have a little bit better than maybe expected earnings, PE ratios get into where we would like them to be. We might pull the trigger on that particular company. DocuSign, another one that took a big hit due to an announcement of new AI innovation. But you've got to believe companies like DocuSign, Intuit, they're going to adapt to what is available to them, and they've got the cash flow necessary to even buy or acquire these new companies. DocuSign in particular has a sticky customer base. They've got relationships all over the country. You've got to imagine that a company like that's going to keep those clients.
Do you think that because it's a midterm election year, do you think that volatility is going to continue? Because we keep seeing policy affect the markets. We keep seeing policy feed into what's happening with whether it's on the defense side, whether it's in energy, et cetera. How do you think that investors should kind of approach what is going to be a monumentous political year? We could see Congress could go to the Democrats. The Senate, maybe, not likely, go to the Democrats. How do you, is it noise, or are there things that we need to be looking out for in this political year?
Yeah, I think it's not only noise, but there are things that we need to be looking for, opportunities perhaps to take advantage of. To answer your question, I do believe that this uncertainty continues. And if the market hates anything worse than an outcome, it's the uncertainty of the outcome. I think that you've got to look at the history books here and realize that midterm years are historically volatile. But the 12 months following those volatile years in the midterms typically end up being positive for the market. So look for opportunities here, Cheryl.
Final question to you, just because, we do have another Fed meeting coming up. We're going to get the minutes later this week. We're going to kind of get more of a window into their thinking. And then, Friday, we're going to get the PC price index. That's obviously a big gauge of inflation. We got some very good reports last week. CPI on Friday. You had the jobs report on Wednesday. We've had some come on and say, these were misnomers. You're going to get a revision in that report for January. Others are saying, no, the economy is firing, policy is working, and that we should be bullish on the United States.
It's the perfect Rorschach test right here. Right? You can look at that piece of data. You can look at the 130,000 jobs added in January and say, man, that is incredible news. Or you can look at the revision that took place in 2025 and say, well, we didn't actually add many jobs. I think, again, the story will be written here. An America First agenda is going to impact the consumer, whether or not it impacts or benefit the consumer, whether or not it benefits the market. That is still something that we've got to keep a close eye on. And the reality is this K-shaped economy has to come under control. We have a president right now that is America First and tightening up this idea that we have to make things profitable for the consumer. 100%, Cheryl.
And pivoting back to my last point there about, the tariffs, willing to pivot when needed, in particular as it affects the American consumer and it affects prices. And I think that that's a very key part of the whole conversation. Dale, thank you so much for being with me today. I really appreciate it.
Always a pleasure.
All right.